Hello and welcome to another episode of the Mark Moss Show, where we talk about the decentralized revolution. Of course, talk about the way the world is changing through the lens of politics, finance, and technology. And technology being Bitcoin, the decentralized protocol. Of course, it's always technology that changes the world the most. Now, I am joined today by Mark Goodwin. He's a director of print at the Bitcoin magazine. He's an author. And man, he's got some late breaking news that just got released this morning that I'm excited to dig into because I haven't got a chance to go through it yet. Anyway, Mark, thanks for joining me.
Mark, man, thanks so much. Long-time listener, first-time caller. Great to be here. Yeah, tons of exciting stuff to talk about. And thanks so much for having me.
Yeah, now I know, you're the director of the print magazine over there at the Bitcoin magazine, and you've written some articles that I wanted to kind of talk about. But you told me that there's some breaking news that came out this morning about regulations. And so I do want to dig into that first. I went and made some bold predictions when the whole FTX collapse happened, and it wasn't so bold that the altcoin crowd, the crypto people, didn't like it so much. But I basically said that I think the regulations are going to come down pretty hard and heavy, and I said that I don't think there will be another crypto bull run. And I talked about it as a category. Like, of course, assets will always just pump and dump. But as a category, I don't see that. And the reason why I said that is because I think regulations will be coming down hard. And if regulations come down hard, then the VC money kind of goes away. And that was kind of my reasoning. And now we're seeing it play out. So what were some of these new regulations? There's been a lot of them. But what were some of these ones that you just saw?
Yeah, no, Mark, I think you're completely right about that, the crypto bull thesis, especially with this news. So, the NYAG came out today in a lawsuit against KuCoin and stated that, according to them, Ethereum, Luna, and UST, the Luna stablecoin, are all considered securities, according to this lawsuit. Now, that was released literally probably about 45 minutes ago. So I think to your point, I mean, if all of those, ways to issue a token are considered securities, which, I think the Howie, it's pretty black and white. I think we can all, Bitcoiners certainly look at this 90-year-old law and go, okay, pretty black and white. If the New York Attorney General is coming out and saying, these three methods of distributing a token, the ETH ICO, this Luna, pre-mine, and then, pegging this to a stable coin, all three of these methods are, considered securities. That has huge ramifications for the, extended crypto space, if you will. And I think we're going to see a very big reckoning in that sense. With this news. So it's a little bit fresh. The markets are still processing it, but huge news. Absolutely.
Now, the New York has, they kind of have their own license. It's called the Bit license. It's been around for the longest. It seems like New York has been the harshest regulatory agency to kind of crack down against cryptocurrency. Although they do issue a license, maybe Hawaii is still stricter, but let's not dig into that. But New York has this kind of history of being the harshest, and so a lot of times exchanges weren't able to operate to New York customers, but they could still operate to the rest. So in the United States, we still have states' rights and things like that, and so New York can kind of do that, but then maybe doesn't apply to the rest of the United States. And so again, blocking New York residents access to these things. But what do you think that means if New York Attorney General would declare something like Ethereum a security? What effect would that have on somebody in California or Texas?
I mean, I would just say it sets a precedent. I mean, it's an incredibly important legal precedent, very influential office to come out and state something like that. I think it does have ramifications for the national regulatory regime, regardless of states. I think again, code is speech, and there's, it's not necessarily we should be rooting for government regulation here. Yeah. But when we're within this jurisdiction and there's very clear laws, I don't think we should really be surprised that this stuff is coming. But I do think it will have ramifications nationally, and I think the U.S. banking system and the U.S. economy is so important globally that it will obviously have huge ramifications on the global economy as well.
Yeah. I do want to just kind of reiterate what you just said there. And, while I have said I think that regulations will stop this, and I don't think there will be another crypto bull run because of that, I am certainly not calling for regulations. As a matter of fact, I'm openly saying that I think the SEC should just be shut down. I think they should shut down in disgrace. I think Gary Gensler should be fired in disgrace. Their job is to protect consumers. They've obviously failed at that job. And I don't believe consumers need to be protected. I think if I can buy a lottery ticket, or I can go gamble in Vegas, I should be able to buy whatever I want. So I think they should shut down. However, they're not. They're here. And so we have to kind of navigate the world, not as we want it to be, but as it is. And so it's here. And so I do just want to state that. A lot of people got mad at me. I'm some statist, and I want this to happen. It's like, no, I'm not a statist. I don't want it to happen, but it's here, right? I'm sure you've heard that. You've heard that as well. But I think to your point, like it sets a precedent. So like law sort of builds on top of itself, and they want to cite other case law. So I think to your point, it can certainly do that. What about, I want to dig into the Ethereum one a little bit, but what about on the, I don't know if you're following, and if you're not, that's fine. But obviously the big case, it seems like, is the XRP Ripple case. And I saw, I didn't get to dig into it, and if you didn't, no worries, but something about some, preliminary judgment, and they're saying maybe they might say some of the pre-mine might have been, but, maybe not. I don't know. Have you looked at that at all?
I mean, a little bit. I definitely agree. I think it's like, that case will really be the landmark case. I think that sort of sets, really, the regulatory clarity. So I agree. It's definitely a case to watch. I haven't actually looked at. It's really hard to tell because the Ripple marketing, machine has a way of turning any, legal output into something very bullish and very distorted, and hard to tell what's going on there. So it's a little bit hard to follow. But no, I haven't dug in too much recently, but I think we're supposed to hear somewhat soon. And I think whenever that drops, these could be a very related, shoes about to fall, Mark. I think the New York AG thing is very big. And obviously whenever we get the clarity on the Ripple case, I think the US regulatory regime will have made itself, very well known.
Yeah, I mean, you have to think. I mean, New York is probably the most influential state, at least in regards to financial situations, and so to your point, it carries a lot of weight. The ramifications of Ethereum being labeled a security. I mean, think about that, right? So, to your point, there's for the listeners, there's a 100-year-old Howey test, which was put together for a citrus grove. So I don't know how citrus trees kind of compare to this, but it's not so bad, actually. I mean, if you look at the four ways, giving money as an investment, hoping for a return, to a common enterprise that has control over how good the investment does, things like that.
If and an expectation of profit, I think that's the last
an expectation of profit. I know what they're doing. I had an SEC attorney on, securities attorney on a few months ago, and he said actually what Ripple's trying to do is they're trying to get these consumers to come in and say we didn't buy it for an investment,
right.
and if you regulate it, you're going to cause us irreparable harm. And so anyway, they're trying to kind of build that case. We didn't buy it for an investment. Like, yeah, right. What'd you buy it for? Because there's no other, you can't do anything with it. But I want to talk about, we'll talk about Ethereum, but let's talk about the broader implications of these companies trying to actually go along with securities regulations if they're able to do that. I think that's kind of an interesting conversation. And then, of course, we're Bitcoin people. We want to talk about Bitcoin. I like to think that the price is the least kind of interesting piece, and I like to look at the development happening on it. And so I know you just recently wrote a paper talking about the development on Bitcoin. I want to talk about that, and then we'll jump into some bigger stuff about money and stuff like that. One thing that I had talked about, and I'm just curious your take on this, that I think it was actually Jack Mallers who called this like regulatory arbitrage, right? Like they're trying to avoid these regulatory sanctions, and they're kind of playing in that middle, and they're able to kind of make that difference. Because if they had to file a security, it's a long process. It's a very expensive process. But most importantly, the problem that I see, of course, these companies have a lot of money because they did the pre-mine. But if they had to do full disclosures, Vitalik would have to say how many Ethereum he got and how much Joseph Lubin has and what the Ethereum Foundation has and what their involvement is and how much they control. I mean, like, could they even do that? And even if they could and they did, what would people think?
Yeah, I mean, I highly doubt we'll ever see that. Yeah, I mean, that is sort of, that's how you, if you want to deal in the U.S. jurisdiction, you got to play ball. And, the Howey test is, 90 years old. And so, these folks, I think, the U.S. regulatory regime, is not doing anything to make, to make the water warm to come into the U.S. right now and try to, make money, right? I mean, they're threatening raising capital gains tax from 20% to 40%.
Yeah, wow.
Huge billionaire taxes coming. All of this big talk about how they're going to try to service this debt. And so what that's really going to do is just further offshore, investment capital in the United States. So I think we will see jurisdictional arbitrage. I mean, we've definitely already seen it. I think the lack of clarity over the last, handful of years has driven a lot of these banks to Bahamian Bermuda banks, driven them offshore, driven them to Asia. I think we'll continue to see that. That said, I think when we do get some regulatory clarity, which it looks like we are getting, whether or not it's what the industry at large wants to see, getting that clarity, I think, will be attractive to businesses if they have very clear, filing, disclosure, all those practices are very clear. I think they will come back. So it'll be very interesting.
Now, Gary Gensler, the head of the SEC, and the previous head of the SEC, Jay Clayton, were both very clear to say that Bitcoin is a commodity. And Gary Gensler has kind of come out again saying Bitcoin is a commodity. It's the only one I'm going to say. Pretty much they're all other securities. So they've kind of said that. So Bitcoin is a commodity. It doesn't have a central issuer. Everybody has the same opportunity to go get it. It's all fungible. And those are kind of the main things. So if you just stick with Bitcoin, you don't have to worry about all that regulatory stuff. So it's a good point. Now, I just got back. I was in Jackson Hole, Wyoming at the Bitcoin Ski Week. Amanda Calvary put together, about 250 Bitcoiners came together. It was amazing. Got to spend a couple days on the mountain as well. And it was really cool to talk about a lot of the development that's happening on Bitcoin. And I know you just recently wrote a paper talking about these ordinals. Now, at first glance, or maybe the initial buzz was that, NFTs on Bitcoin. Give us kind of the high level on these ordinals, what you're thinking about that.
Yeah, totally. Well, it's a really interesting project. It's definitely super controversial, which I totally understand why. But more or less, it breaks down into, kind of two parts. It's created by another Bay Area Bitcoiner out here, Casey Rodamore. There's kind of two parts to the project. There's sort of this idea of ordinal theory of sort of like, looking at Satoshis on an individual issuance level, like a serial number, arbitrarily, and imbuing value to it based on a sentimental reason of some reaction to the number, or when it was found, when that block was mined, when this Satoshi was issued. So that's kind of part of it, is this sort of arbitrary index of looking at how Satoshis are issued and then distributed within a transaction. So it's just kind of an interesting way to look at the network. And then the second part of it, which I think is kind of more the controversial part, is the inscriptions. So it's this new tooling that takes advantage of the witness data with the block size increase in 2017 with SegWit. And then Taproot came out a couple years ago, and it increased some standardness bounds. So basically allowed this tooling to exist where you can inscribe arbitrary data into a Bitcoin transaction. That data is stored in the witness data, not in the actual transaction data. It allows people to create basically immutable data if they want to pay for it, if they want to pay the fee. So yes, some people are using it to put monkey JPEGs on the chain, which is, it's either a valid transaction or an invalid transaction. That's Bitcoin, right? Not the use case I would necessarily use it for, right? But then you are seeing people storing, bannable files. We have STL files, 3D printing files. We got the Yankee Boogle out in there. We're seeing text, bannable texts. The Bible was inscribed, the King James Version.
The whole Bible?
So there's a lot of interesting use cases in that arbitrary data beyond the traditional kind of NFT wash trading stuff we've seen from kind of the Ethereum ecosystem. So
they can put the whole Bible on there?
Oh, yeah, 100%.
Wow, that's a lot of data.
I think they split it up into 5 parts.
Wow.
You could store up to 4 megabytes, up to the full block size. So you can fit a lot of text in 4 megabytes.
Yeah, I mean that's incredible. At first it was like the JPEG thing, right? And which never made sense to me in the first place, because it doesn't make sense to take a physical object and then try to match it to something digital,
Of course.
It just doesn't make sense to me. But there is digital information that is very valuable, that does need to be protected. It makes me think of that movie Fahrenheit, I think 451, right, where they went around and burned all the books. Which sounds actually very similar to where we're at, where the whole world had this civil war, and so to prevent a civil war from ever happening again, they got rid of all the information. There was just one arbiter of truth, and if everyone just believed the same thing, there'd be no war. Which sounds sort of like where we're going, and so we can see where we need to do that.
Sounds like where we are, my friend.
Yeah.
I think we've been there for a bit. We're burning books and banning platforms and deplatforming everybody left and right. So I do think there's an absolute need for immutable truth. And Bitcoin is a database. We love it as this economic force. And of course it is that, and that will always be its main principle, its main function. But it is a database, and if someone wants to pay, and they think imbuing this data in everybody's nodes for eternity, is worth the fee, then that's their right to do it. And I think we'll see some interesting use cases. I think there's been a lack of creativity at the immediate. There was a big just copying of this culture that existed before. I'm excited to see new culture arise from it. It's interesting. Yeah.
Yeah. And one thing I was thinking of when you were talking, and when I first saw the Ordinals, Mark, was that my first thought, I kind of had this like knee-jerk reaction, which is like, why don't we just leave Bitcoin alone? You see what happened? You put the taproot in, and then the law of unintended consequences kicks in, and now we have this thing going on. And that was kind of my knee-jerk reaction to it. And then I'm starting to think, well, I guess let's just see how the free market, works itself out. What were your thoughts, or where are you at with it, in regard to that?
I think I'm with you. I obviously am, I'm a believer in censorship-resistant money. I'm also a believer in the consensus and rules of Bitcoin. That's why I'm a Bitcoiner. None of those things have been violated by this new tooling. But I agree with you. I think there has been a really big knee-jerk reaction to it, because this ultimately isn't the main, purpose of Bitcoin. But I think the free market, or maybe more specifically the fee market, is ultimately going to be the curator of what comes next. And just when you look at it from an economic standpoint, this idea of it's like anyone could always have spammed the blockchain forever and bought up every block, and of course someone wants to waste all their Bitcoin doing that. Of course, go for it, sure. That block space was always available to be purchased. But when you're doing inscriptions, you want to buy a full block. You want to inscribe a substantial amount of data, above like 3 megabytes or something. That gets incredibly expensive. And when there's a dynamic fee market, a 10x in fees, when you're paying 50 cents for a transaction is, that's okay. You can kind of handle that. But when you're paying thousands of dollars to buy a whole block, a 10x increase, a 100x increase in a dynamic fee, sat per VByte, that becomes incredibly, it just doesn't scale at all. There's no economic incentive to do that. And so this fear, I think, of, bloating or spamming the blockchain, I think just really doesn't economically play out.
Yeah.
but we'll see. We'll see how it goes. The mempool has been insane lately. We've gotten almost like half a gig up there today. So we're seeing a lot of transactions, like 50,000 transactions in the mempool. We'll see how it all plays out. But I think in the long term, it's very unsustainable.
Yeah. Now, one thing I like to think about in terms of Bitcoin, I talk about all the time, is a technological revolution, or different than technologies. So technology, like an iPhone, you take a phone and a computer, you put them together. Cool. Technological revolutions changed the course of humanity. So we had 5, right? Industrial revolution, steam engines and railways, electricity and steel, oil, automobiles, and then the microprocessor. And what I think about when I think about those, I think about each one of those gave us new sets of building blocks that allowed us to build new things that we had no idea because we didn't have the building blocks. So like steel, for example, or let's say like electricity. There's a first killer application. So the light bulb was the first killer application of electricity. So it was designed, it was invented, it was created to give us electricity. But of course, it became used for way more than that. And so like steel was so we could build a higher building, right, or a bridge. We didn't know we'd have space shuttle one day. And so when I think about Bitcoin, like obviously Satoshi Nakamoto in the Bitcoin white paper said that it's a peer-to-peer electronic cash. And that's what it was designed for, but it's a new set of building blocks that allows us to build all types of new things that maybe aren't what the original creator intended them for, right? And so we have this censorship-resistant database, if you call it that, a time chain as he called it. And what can we do with that? Well, certainly money is the killer application. But like what Jack Dorsey's kind of Web 5, now we're like hashing a decentralized identifier, ID, into it. Well, that's interesting. We didn't think about that. Now, like a Ordinal subscription, which to your point, NFT seems kind of silly, but certainly throughout history, putting a Bible in there could have been very beneficial, or 3D printed guns would be very powerful in a country where you need it. So do you kind of look at it like that? Like maybe it grows out of, money being the first killer application, but now it's a building block we can build all these new things on?
100%. Yeah, absolutely. I mean, it's the internet of money. It is a database. It is an economic, unbelievable force, and that is its sort of, again, major principle, layer 1. But yeah, I mean, there's so many applications you can build when you have a database system that economically incentivizes you to retain the immutability of the chain and propagate it to everybody and propagate transactions. There's an economic incentive of storing those gigabytes on your node. And I think, that's an interesting angle to the Ordinal story, is that it's sort of a psyop to get all of these shitcoiners to run full nodes, right? Here they are. They have economic incentive to never prune the witness data because that's where all their precious JPEGs are. So, we've seen thousands of nodes spin up in the last 6 weeks.
Really?
Because of tooling. Yeah, we're seeing a huge increase in node count. Again, all of these people are economically incentivized to store that data forever. So it's an interesting wrinkle, and Bitcoin teaches us so much. We're all sort of, I like to look at it as a database, of course, but also, a game. It's this big economic game playing out everywhere. Nation states are playing, central banks are playing, and individuals, sovereign individuals alike are playing. These rules are just as much playing us as we're playing them. And I think this is just another interesting wrinkle where the protocol has evolved via tooling. And now we have a whole different set of users that are upholding this system that we all want to see the world uphold for, sound economic reasons. And they're doing it for a completely different reason. But they're achieving the same goal of, network security. Bitcoin is a living thing. And it's really not about us. And its use case will always be determined by the market. And right now there's a market for that stuff, and an economic incentive to, do what's best for the network.
Yeah.
So I welcome them all.
I also think about, being, the first killer app being money, but then what is money? Right? Robert Breedlove has a podcast that all he does is talk about what is money, right? And like, what is money? And everyone thinks they understand. Oh, I got my wallet right here. I got a dollar bill in there. I got money in my bank. And we think we know what money is, but really what is money is a very deep and profound question to ask. And if you were to say, well, money is just communication, money communicates value, right?
Yep.
Well, then so would the Bible or 3D printed gun schematics be value as well. And so
100%.
if all money does, right, if you boil it down, like if you think about it, well, instead of having a dollar bill, I have a sat or, a fraction of a Bitcoin, and I transfer that to make payment. But if you think about it from a bigger angle where money is actually just communication, and there's all different types. And if you think about that, like think about how even communication has changed. I would imagine if you went back to the 80s, information, I guess there's books, I have the library. I can go to the library and I get, there's, 3 nightly news channels and 2 morning newspapers. That's information. Today, a kid on a beach in Fiji can post a picture, and I get all that information of what the weather's like, what the waves are like, right? And so even what we know as information's changed. So I think what we think of communication and value is going to change. And so it's fun to think about, although humans are no good at imagining the future, right? Because all we can think about is better versions of what we have today. And without those building blocks, we don't know where those things will go. I want to get into a little bit of a bigger conversation. We'll get into the dollar itself and what we consider money as today anyway. Mark, I know you wrote another article, albeit a while ago, talking about, a Bitcoin dollar, as you called it. And you were referencing it kind of in reference to the petrodollar, where the dollar's been backed by Saudi Arabia and the petro or the oil that they have there, basically pricing everything in dollars. And I think you were kind of comparing that to like this Bitcoin dollar. Why don't you frame that up for us a little bit?
Yeah, no, I think you did a great job. It's kind of an allegory to the petrodollar. So this idea that the U.S., in order to fight inflationary effects of an increased monetary supply from the Nixon shock in '71, going off the gold standard, they, did a whole bunch of military imperialism in the Middle East and established an economic monopoly on petrol and oil, and basically created a furnace to shove all of this, dollar demand, because all of these industrial nations in Asia and Europe, needed oil. So they were able to sort of offshore their debt and inflationary effects. And so the argument now, this thesis, and I've expanded it actually into a book that's coming out called The Bitcoin Dollar, is sort of this idea that the U.S. government is actually incentivized due to this runaway debt service, inflation that's happening, to find a demand elastic commodity, an energy commodity, to peg itself to. And so we're seeing right now sort of a recreation of that mechanism of on-ramps and off-ramps to Bitcoin being predominantly U.S. dollar denominated. Huge USD pairings, huge volume on these USD pairings for Bitcoin. Strong majority of volume is coming from, KYC, dollar account inputs. So that's sort of the argument that, there's an economic incentive for, the U.S. to tether themselves to Bitcoin. And I think what we're seeing now with this regulatory regime and this post-FTX sort of stablecoin war, we're seeing the kingmakers being made. We're seeing the regulatory regime sort of choosing who gets to be the issuers of these, the oncoming billions and billions, if not trillions, of stablecoins that will be issued when, private banks start buying U.S. treasuries and start issuing stable coins. So I really think the dollar and Bitcoin are going to be the huge players, certainly, for the rest of the year and probably for the rest of the decade and possibly even a little bit more than that. So I'm really focusing on the dollar, learning a lot about it. I think Bitcoin and the dollar are just very strange bedfellows. There's a lot to dig into there for sure.
Yeah, it's interesting. I covered earlier the story that everybody kind of in the Bitcoin community is kind of freaking out because the U.S. is potentially looks like they're about to go dump a bunch of Bitcoin into the market. They had $1 billion worth of Bitcoin that they transferred over to Coinbase wallets and some of the government wallets as well. And so investors are thinking that they're probably going to go dump that, which historically, they haven't done that. They've sold it off in auctions, and no smart seller would ever go just dump that into the market anyway, unless they potentially wanted to come down. So that's probably not the case. But then I was looking up some of the, we don't know for sure, but some of the other governments' holdings of Bitcoin. And the U.S. government has quite a bit of Bitcoin on the books, but some nations like China look like they have like 200,000 Bitcoin on their books. And it's sort of like Jason Laurie has been talking about, the strategic interests of a nation to acquire Bitcoin. I think he's talking about it more from a mining standpoint, but that's more of it on its books. I saw Bitcoin Magazine on Twitter had put out something about the Biden admin proposing a 30% tax on electricity used for Bitcoin mining. So I don't know which way they want to go here, man. It's like on one hand, it would make sense to have it, control it. Even, maybe if there's a small chance it takes off, maybe we should kind of have it. But, I mean, if they put a 30% tax on it, I mean, it's just going to go overseas again somewhere, right? I mean, that's the economic interest.
Right, or it allows them to create loopholes for the companies and personnel and VC interest. Again, this is the U.S. dollar system is all about retaining purchasing economy and making as much money for the quintillionaires as possible. I mean, we've seen this time and time again. Anytime there's debt issues or inflation issues, up pops a war. Up rises taxes, and here we are, and we're at actually sort of an economic breaking point, where now just the interest on our debt service, in a year is now actually over our military spending.
Right.
So we're actually spending more money to pay for our dollar than we are to pay for the military that's holding up the dollar theoretically. So we're in sort of uncharted territories where we're Roadrunner that's run off the cliff.
Yeah.
We'll see who gets made king and who gets to sort of run the retail CBDC, I guess.
Yeah, I hadn't really thought about it like that. I mean, and obviously I should have, but I mean, to your point, right? It's king making. You said that earlier, picking and choosing winners. So everybody has to pay a 30% tax except for you guys over here.
Right.
You don't have to, or we don't have to, sort of a thing. So that could be interesting, but. To the point that you made too about running kind of the government off the cliff, it's like the Fed is trying to, they have raised rates higher and faster than any time in history, trying to crush inflation, but they haven't been able to crush inflation, but they have managed to crush the government, and the government's broke. And of the $31.5 trillion of debt, 30% of that has to be refinanced in the next year at the new rates. 50% of it has to be refinanced in the next 3 years at the new rate. And so that's going to push the interest payments up, who knows? It's right now an average of 1.7%. That would put it, it's different rates at different maturities, but it pushes it between a 3.5% to a 5.5% number, which could potentially take us from about a $900 billion of interest expense to 1.8 trillion.
Yep.
In interest expense, and that's a big problem.
Mm-hmm. Yep. I mean, we're Bitcoiners. Compounding annual growth rate. Little KGAR. You don't want that running wild in your debt. So, and that's exactly what's happening. So, yeah, to your point, I mean. We're going to have to deal with that mathematical reality. I don't know when that will happen, but obviously we will need to create money to pay that debt. There's no way we can make enough off tax receipts, even with the insanity of the capital gains threats that they're saying in the last couple of days. It won't even come close.
Yeah.
So printing will have to come at some point. We'll see what happens till we get there, but it's going to be a hell of a ride.
Yeah, well, and the other problem is that the expense column is going up, right? The interest on the debt is going up. The spending is also going up, but the tax receipts are going down. So to your point, they want to put in all these new tax things because the tax receipts are going down because the Fed is crushing demand by making everybody poor, and then everyone's poor, so then there's no taxes. And then the tax receipts, so in California, corporate tax receipts are down 20%. Statewide is down 40%. In the U.S., it's down 9%. That's a big drop. And then I saw this chart last week I was looking at, and it showed no matter what the tax rate is, the government typically gets the taxes typically come out to about 19% of GDP. So tax rates up, tax rates down, the share is about the same. So the goal should try to be to get the GDP bigger, not just the tax share bigger. But it's going to be interesting to see how that plays out. If you're just tuning in, you're listening to The Mark Moss Show. Of course, each and every week talking about the decentralized revolution. I've been talking to Mark Goodwin. He's the director of print editorial at Bitcoin Magazine. Definitely check that out, bitcoinmagazine.com. And give him a follow on Twitter at @MarkGoodwin_IN. Of course, I'm at 1MarkMoss. That's what we got for today. Hopefully you enjoyed it. Shoot us a message, let me know. Thanks for listening.